Good afternoon, this is Rich Nelson with Allendale. Coming to wrap up comments, today is Tuesday, June 15th, 2010. Of key interest today as far as the outside markets, we did see some action on the U.S. dollar dropping for another day, down 53 currently. We also see the crude finding support up about 172. Perhaps some newest news as far as the biggest thing going on in the grains here today was simply interest on this oat trade. The fact we did close the July contract up 27 cents. So this continues this very strong trend on the oats. Something of interest, if you look at the oat minus corn spread, currently there's about a 79 3/4 cent discount in oats. This is actually the smallest discount we've had in that since October of 2007. So certainly quite a big move here in oats compared to corn. And as we said before, we do see some of these trades both move, some of these markets move together, but looks like this oat corn spread could continue to advance here. As far as other things going on, midday, our own Jim McCormick did send us around a interesting little article on some WGN Tom Skillings. He is one of the famous Chicago forecaster that many of the market watchers still look at here. Of interest, the 2-week Chicago rainfall is expected to be about twice as double normal here. Looking at 2.5 to 6 inch range is what he's expecting for the next 2 weeks. And as I said, that's twice as much as normal. Key interest today also this developing storm that's just been going on here for since this morning has moved out of the western Corn Belt, currently moving in the western Illinois area. Quite a big system here to look at here. It may bring a little more than that forecasted quarter to 3/4 that's been seeing on the forecast. Maybe this one's going to bring a little more than expected here. So we'll be watching that as well here. As far as some the general grain trade today, very quiet action here for the most part. We did see corn finish unchanged on the July, soybeans down 2, and wheat up about 1/4 cent. So not too much of interest going on there. Specific to each commodity. Of interest, if you look at corn and you measure a retracement level down from that high we put in about a month and a half ago or so, on down, we have retraced about 38.2%. 354.25 is where that very first line of resistance comes in for the July contract. It's interesting to see that kind of held. Also on the charts on the soybeans. Keep in mind, soybeans for the past maybe month or so are actually in a sideways trade, and we have seen this market actually try to post us some small moves on the upside here. 960 is held on that July contract now today as well as yesterday. So it's interesting to see that this market has made 2 attempts at trying to push for higher prices, and so far it's failed to hold those gains in the close here. As far as news of interest, as you may have heard us at the meeting yesterday, as far as our weekly broker meeting, corn, we have the yield right now 176.1 is our current guess based on the crop condition model. And as we said very clearly during this during the meeting, during extreme highs or lows in terms of yield or conditions, it certainly inflates the type of change on yield. So while the model says 176, it certainly is not going to be anywhere near that type of number here come the July report. Typically, USDA only adds maybe 3 to 5 bushels at the very high end, going from June to July as far as our numbers. So don't look for a tremendously large increase as many in the trade are trying to suggest right now. Over on the soybeans, of interest, there are some reasons why this market is rallying. Not only Chinese buying that soybean oil last week, but also of interest the fact that 7 million acres are left out in the field right now, or I should say have not been planted yet for soybeans. The key states there, Missouri, I have 1.6 million acres. Illinois, about 855,000 acres. Next one on the list, I have number 3 here, Indiana, 660,000 acres. So there is still some planning that needs to be finished up here, and some are suggesting, especially as Paul mentioned during yesterday's broker meeting, that perhaps some producers will choose preventive plant rather than actually trying to get that planning finished up here. Over in livestock, kind of a mixed trade here to speak. We did see, of course, the hogs did have some mostly lower trade here during the day, but actually finished a little higher. July up 7, August up 60 cents. Of course, this lower trade initially was in reaction to that cash pork price, that significant decline posted yesterday. And keep in mind, as we said, we are trying to argue this market is making a seasonal low on cash hogs and cash pork. So while we did have that break on cash pork, we must point out that cash hogs did a great job today, steady to $1 higher throughout the entire day. So we are still arguing that this market is near a seasonal low here. As far as something else of interest, this afternoon we released our estimates for Tuesday's cold storage report, and as far as a pork stock number, we have them declining about 51 million pounds. From last month, typically we decline about 48 million pounds. So certainly should be a good, another good bullish pork stock number there to speak of. Over on the cattle side, up 47 cents for the August contract. We will note, surprisingly, that the midday beef report actually showed beef up $1.68 for choice and $1.67 for select. So that was a little surprise. While it's good news to hear, we wonder how the trade will kind of take this type of news and mix it in with the other news on this cattle and feed number. So most of the Newswire reporters are collecting estimates for Friday's cattle and feed report. The key interest on this report is going to be this big placement number. So we know that March and April and May, cattle feedlots made a lot of money. Roughly a little over $100 per head is the average between that period. So certainly with quite a financial incentive, our producers throwing extra cattle in the feedlots, and for March and April, they were not. However, for May, talking with reporters today, these numbers are phenomenal. There's talk anywhere from a 17% increase on placements. That's on the low end. I've been told there's even someone who has a 37% higher increase in placements plugged in for May. So quite a big number. These are quite some big numbers. You don't see this type of action here on the cattle side on these placements. Our number here, we're looking for an increase up 15.2%. So the trade is arguing that feedlots are starting to react, and they did throw a bunch of cattle in those feedlots here last month. And as I said before, though, this is a very hard report to guess when you have this size of an increase going in here. We're saying 15.2% more placements. Most of the others are in a range from 17 to as much as 37% higher. So quite a big range, and we're going to have quite some good arguments to vet out here once that report does come out here. So overall, it looks like kind of a mixed trade on the grains. As far as the livestock, did a decent job up for both cattle and hogs here today. If you have any questions about these reports, markets, or marketing in general, feel free to give us a call here at Allendale. Our number is 1-800-262-7538. This is Rich Nelson. Have a great day.